I am holding a position in NIO. None of this is investment advice. What's going on, everyone? Welcome back to the channel. Courtside Financial here. If you want to see more videos like this, make sure you hit the like button and make sure you hit the subscribe button. It really does help the channel out, and these videos take a long time to make. So I sat through NIO's earnings call, and the things that I want to talk about today, I want to start off talking about the vehicle deliveries and why the stock price has dropped. It's sitting at $3.86, which means the stock has actually dropped 7.43%. You got to understand the battle that NIO is facing right now. They're facing a battle of survival and scalability. They're not going to be able to get out of the red and stop burning through all of this cash until they can really ramp up their sales and create a high demand for their product. With that being said, we already knew that Q1 was not going to be the best quarter for them because of the whole entire Roni situation going on, which has hit the automotive industry very hard. I just kind of want to get into a little bit of that situation so you can have a clearer picture of what's going on. The lockdown in China began January 29th. And it lasted until April 8th. Not only did that happen, but it's also coupled with the fact that auto sales typically see a decline in February in Q1. It's not usually their strongest quarter. How has that impacted the delivery numbers? In January for Q1, they delivered 1,598 vehicles. In February, you see a decline. They delivered 707 vehicles. In March, you see that they delivered 1,533 vehicles. With the entire lockdown going on, in the earnings call, they said that most of their sales came through their online channels. Only about 17% of those sales came from their NIO homes. Now that the lockdown has lifted, we also see a statement from the CEO, William Lee, saying that they're seeing demand returning very strongly in the automotive space. So that means that people are going to be going to those homes again. That means people are also going to be utilizing the online channels, which is very good for NIO's business and Tesla, that they can sell vehicles in this way because it's innovative. The world's changing. A lot of people don't want to go into a store anymore to purchase a vehicle. A lot of people don't test drive these things anymore. They just order them online. So this is a statement that William Lee actually gave out today in the earnings call. Our strongest recovery and growth were attributable to the competitiveness of our products and services, the continuous support from our user community, and the effective expansion of our sales network. We expect to deliver 9,500 to 10,000 vehicles in the second quarter, a record quarterly delivery in vehicles since our first deliveries. And that's true. If you go back to Q2 last year, NIO only delivered 1,089 vehicles in that quarter. So this is huge growth, 772% to be exact. Now, a lot of people are going to say NIO was just getting started back then. I think that this is I think that if they are able to do this, it would be a positive catalyst for the stock price in the short term, and it'll be just good overall to have a great Q2. That'll really be something that excites investors and shows that NIO is making a quality product. Another thing he said in the earnings call was that the fact that during the lockdown, people were still continuing to purchase their vehicles shows that they are making a quality product. In my last video, I mentioned how Auto Home ranked the NIO ES6 the #1 quality vehicle, and reliability is a huge driver of consumer purchasing intentions when it comes to the automotive industry. A lot of people want to make sure that their car isn't going to have a lot of problems or issues before they purchase it. And that's why a lot of people don't buy cars overnight. They do their research. And if you do your research, to me, it sounds like the quality is definitely there for NIO. As far as their earnings per share were expected to be -26 EPS, and they actually beat that by 3 cents, coming in at 23 cents per share EPS, which is pretty good. The things that I wanted to know going into this earnings call relating to funding and the Hefe deal, they didn't really go into too much detail about the deal structure and how that's going to affect shareholders, but they did give us some assurance. I just want to go over my concerns as far as their financials. They right now currently have a cash and investments position of $338.6 million. They have a negative gross margin of 12.2%, and their operating expenses are coming in at a net loss of $198.1 million. So the finances aren't adding up, and that's a huge concern for investors, and I think that's a big reason that Wall Street is watching the stock closely, but they're scared to make moves on the stock right now. When it comes to NIO, it's a highly speculative stock. There's huge risk because of the finances, but William Lee said that with their strategic investments and their cash position and seeking out help from the Hefe deal, they should have enough cash to last the next 12 months, which is a good sign for investors who are worried about bankruptcy or NIO going under, or whatever the case may be. But it's also still very concerning because with all this cash coming into NIO, that means dilution for shareholders most likely. So in my opinion, if they can properly manage the dilution in a way that's fair for shareholders, then that means that this stock could potentially be a great long time buy. Back to survival and scalability. Here's what I heard in the earnings call that was really exciting for me. They were able to deliver 3,643 ES6, which is their smaller version of the ES8, while the ES8 only was able to do 195 deliveries. Now, there's a couple reasons for this. They are ramping up production in the ES6 more than they're doing in the ES8. The ES8 costs more than the ES6, so the ES6 can appeal to a larger audience. And with that being said, there's a 1-to-3 sales ratio. So pretty much for every one ES8 that they're selling 3 ES6. Now, they announced that in September, their new model, the EC6, would be coming out, but they did not give a price point. They also said that they do have some orders for it already. And now, if you think about it like this, if the ES6 is their smaller version of the ES8 and there's way more volume accompanied with that, then how much more volume is there going to be when it comes to the EC6, which should be more affordable, which is smaller, so it will get more range as well. I think this model will really be a game changer for NIO. As far as setting prices, they're waiting on the competition. We know who the competition is. The competition is Tesla and Tesla's Model Y. So we want to see so I believe the EC6 will be able to undercut the Model Y from a price standpoint and deliver value to their customers, which will also be a catalyst for the stock price. Another catalyst that is going to be in store is NIO Day. They have NIO Day every year, is what they said, and they said that they plan to reveal something special, but they didn't want to spoil it in the earnings call, so that's going to be another surprise. Again, we do have to make note of the fact that NIO is burning through so much cash. Just from operating, NIO is losing $221.8 million, and the only way that they can survive is by acquiring investments and closing deals. So we'll look to see where that leaves us in the future. I am holding a position in NIO. None of this is investment advice, but I believe that there's going to be a monster Q2 for them. Hopefully I'm right. Nothing's guaranteed in the market. Do your own research and make sure you understand everything for yourself. Never take advice from anyone on the internet. Just use it as something to think about. If this video was helpful to you in any way, shape, or form, make sure you hit the like button, make sure you hit the subscribe button, and I want to know what you guys are thinking, so leave a comment down below.